If you are the executor of an estate or serving as the trustee of a trust, after a person passes away, you'll need to know about the various forms of tax that will come due in the process of administering the trust or the estate. And that's exactly what we're going to cover in this video. So to give you an overview, here are the 4 types of taxes that you may be dealing with as an executor or a trustee. We have number 1, the decedent's final year income taxes. Number 2, fiduciary income tax, or tax that comes into the estate or the trust. Number 3, inheritance taxes. In Pennsylvania, where I practice, that is Pennsylvania inheritance tax. And number 4, federal estate tax. In this video, we'll introduce each form of tax and tell you when each form of tax is due. So first up is the decedent's final year income tax. Just as we file our income tax return each year throughout our lifetime, a tax return must also be filed for the decedent's final year of life, which reports any income that the decedent earned up until the point of death. This is reported on Form 1040, and the return is due on April 15th of the year following the year of the decedent's death. Generally, we will recommend that the tax professional who prepared the decedent's personal income tax return in years prior also prepare the decedent's final year income tax return, because they likely have most of the information needed to prepare the return. After a person dies, if there are assets being held in the estate or in a trust, and if those assets generate any kind of income, that income is called fiduciary accounting income, and it's subject to income tax and must be reported to the IRS and to the state. So I'm going to show you a quick graphic to demonstrate the difference between the final year income tax and fiduciary income tax. So you can see that Form 1040 reports personal income tax in the final year of the decedent's lifetime, and immediately as of the date of death, any income that would be otherwise due to the decedent but is instead coming into the estate or into the trust is reported on Form 1041, which reports the fiduciary accounting income. For an estate fiduciary tax return, which again is Form 1041 in the United States, the tax is generally due by the 15th day of the 4th month following the end of the estate's tax year. So there are 2 different options for determining the tax year. For estates using the calendar year, the tax is due by April 15th of the year after the decedent's death. For estates that use a fiscal year, the tax is due by the 15th day of the 4th month after the end of the fiscal year. So if you didn't catch that, you can rewind it back. But those are the 2 different ways of determining a tax year for an estate or for a trust. Now, this type of tax is not an issue in every estate or trust. Frequently, just because of the way the estate or the trust was structured, there may be no income producing assets in the trust or the estate. And if there is no income, then a return does not need to be filed. It's common to distribute out all of the income to the beneficiary. So ultimately, if this occurs, the estate itself does not pay the tax. The estate files the return and issues a K-1 to each beneficiary, who then reports the income on their personal income tax return. The next form of tax that we will explore is Pennsylvania inheritance tax. So Pennsylvania inheritance tax starts at $1, and any asset that transfers by reason of death is subject to this tax. This also includes any transfers made within 1 year of the decedent's death. Pennsylvania inheritance tax is a very common form of tax that we deal with in the administration of trusts and estates in Pennsylvania. Unless the estate is insolvent, or unless all of the assets fall under an exclusion or an exemption, or offset by deductions, the estate or trust will pay Pennsylvania inheritance tax. If you're interested in learning more about Pennsylvania inheritance tax, I have 2 videos that explore this tax, and it talks about the tax and the various exemptions and deductions. And I'll link to that video below. So Pennsylvania inheritance tax is due 9 months from the date of the decedent's death, but there is a 5% discount on any amount of tax that's paid within 3 months from the date of death. This is called a discount payment. And if you want to know more about the discount payment, I'll put a link to a video on that in the description as well. And finally, we have federal estate tax. Whether or not an estate will pay federal estate tax depends on whether or not the assets in the estate fall under the exemption amount in the year of the decedent's death. Under current legislation, the exemption amount changes every year because it's adjusted for inflation. So in 2024, for example, the exemption amount is massive at $13.61 million. Through what's called portability, you can also get the benefit of a spouse's lifetime exemption. So for a married couple, you double the exemption. So in 2024, that would be $27.22 million. So if the total value of a decedent's estate is under that massive exemption amount, then the estate will not pay any federal estate tax. Just a caveat, however, in January of 2026, the exemption amount is set to be reduced to $5 million adjusted for inflation. So maybe somewhere between $6.5, $7.5 million. So absent an act of Congress, many more estates will be subject to this tax. The federal estate tax is due 9 months from the date of the decedent's death. And if you're interested in learning more about federal estate tax, I included a link to that video as well in the description below. Please consider subscribing to the channel if you find this content helpful, and I will look forward to seeing you in the next episode.